Now, if you remember, Bitcoin was launched in 2008, 2009 period. That is the same period when interest rates went to zero. And guess what? The halving cycle is exactly the same as the economic debt payment cycle. They're all the same thing because they were all born at the same time. So that, I think, is the big driver. The macro is the big driver. So when we zoom out, we look at the Bitcoin chart on a log scale, and you can see the trend rate of adoption over time. The acceleration is when the balance sheets start getting used and people start putting money into the space and the space grows over time. And we will see that ongoing. So the total crypto market cap hit 3 trillion at peak. What will it be at next peak? Probably 10 trillion. As more money comes in, more people stay in the system and opt out of the old system, or find new uses and applications in a Web3 world that makes the internet just better, fairer, and more democratized and more decentralized. But that trend rate of Bitcoin, well, we got in that beautiful cyclical low the buying opportunity we were all looking for. People are still arguing whether it's going to go lower, etc. The probability is it put in the lows and now we're on the upcycle. And it's what I think is the start of crypto spring. I think we've been through crypto spring and we're going to be moving into crypto summer. And we'll talk about that in a sec.
Macroeconomic expert and Real Vision founder, Raoul, believes that the crypto market is on the verge of a significant surge. He identifies 3 main factors supporting his view that we are in the early stages of a crypto summer. Firstly, Powell is highly confident in the occurrence of more monetary stimulus or money printing, which he considers to be like jet fuel for the crypto market. Secondly, he draws parallels between the current crypto cycle and the 2010 to 2011 cycle, noting similar setups before a major upward move. Additionally, Powell remains unconvinced that the banking crisis is over, expecting further monetary stimulus and federal bailouts to follow. Considering these factors, he anticipates a substantial increase in money printing on the horizon, which will ultimately lead to explosive growth in the crypto market. To learn more about Raoul's full insights on the upcoming crypto summer, make sure to stay tuned.
Crypto summer is the point when prices start going parabolic. It usually coincides with the money printer go burr, or more cowbell, as I like to say. So there's some really good analysts in the crypto space, and one of them I really like is Tech Dev. I subscribe to his newsletter. I have no affiliation, but I subscribe to his work because I think he's very thoughtful and is not subject to hyperbole, but just very thoughtful in what he does. We do know that a lot of people like fractals in crypto. Sometimes they work, sometimes they don't. Do they give you an informational advantage? I think generally, contextually, they help you understand human behavior and how prices can move. I don't really like to trade on them all the time or, as the main thing, but as supporting evidence, often interesting. I've also had some spectacular failures with them too. If you remember the ETH call, the next leg higher call back in 2021, that was based on a fractal. It completely failed, but luckily I owned call options, so it wasn't that painful. But anyway, so you never always know. But the point being is this cycle is pretty similar to 2010-11 cycle. Same kind of setup. So that's interesting to me. What's interesting, it's a similar kind of setup from the 2017 cycle, 15-16 cycle. So we've got a similar structure and a similar kind of market. 2019 was a bit weird because we had that big correction over all of 2019 after a huge run to begin with, 300% up, then a big correction down, and then we went parabolic. I have a feeling we might go parabolic earlier here because I think we're getting closer to a banking crisis within the regional banks that will require the Federal Reserve to step in. Interest rates are kind of getting out of control, so interest rates going up, the yield curve inverted, bad news bears for the banks. You can use the KRE ETF to see where we are in that, but if that starts breaking 35, 30, then it's game on for more cowbell to come because the Fed are going to have to bail these people out, and then we've got the commercial real estate problems behind it. So that's the kind of backdrop of why the cowbell will come, and I think it's even an excuse. Maybe that's the reason the Fed are tightening rates even further, is to create a crisis so they can cut rates so they can monetize the debt. Because if they don't, they have to print more money because the interest rates are higher to pay for the debt payments, and that becomes a total catastrophe. The key point is liquidity up. If I use my simplest forward-looking indicator, which is the GMI Financial Conditions Index, it gives us a 5-month lead on Fed net liquidity year on year. And it says liquidity goes up till the end of the year. Okay, if liquidity is going up to the end of the year, it generally means crypto prices are going to go up till the end of the year because I've shown the relationship between the two. There's in fact an 87.5% correlation between global liquidity index, not the Fed net liquidity, the global liquidity index, and Bitcoin. The reason it's only 87% and not higher like the Nasdaq, which is 97%, is because Bitcoin completely diverges so much in bull markets. That's the outperformance and the boom bust phase. Anyway, Fed net liquidity is going up. Global liquidity is going up. We can look out 5 months. I can actually look out to 2026. That's the theory and hypothesis that I've been working on in the Everything Code. But right now, it tells us liquidity goes up. Now, liquidity also does something interesting. In all financial markets, after a period of contraction, when liquidity comes in, it goes first into the highest quality assets, and then eventually, once the trend is established, it goes out much further down the risk curve. So you see it in bond markets, it goes from government bonds to better credits to junk bonds to emerging market junk bonds, for example. That kind of risk curve is very common, and it's the same in crypto. It's like a human behavioral trait. When do I feel comfortable taking more risk? Am I making money? Do I want to speculate more? So what I found is, while I was thinking through this, thought, well, obviously crypto must act the same way, and it does. And here's the proof. I don't think anybody's seen this chart before, except Global Macro Investors subscribers. This is the ETH Bitcoin ratio versus Fed net liquidity, outright, not the year on year. And Fed net liquidity leads it by 3 months. And we know that in 5 months ahead of this, we will see more liquidity coming. It keeps going up. So if it keeps going up, then ETH eventually will break out from Bitcoin. Now, I've been showing for a while this chart of mine, which is the trading view chart of the log chart of ETH versus Bitcoin. And I think it's a huge wedge pattern. And if it is correct that it's a wedge pattern, it's massive and it's on a log chart. So the day-to-day machinations or week-to-week or month-to-month make no difference. But over time, if this breaks, then ETH is going to massively outperform, which has been my hypothesis for a while because of network activity and the amount of things being built on top. But another way of looking at this is I can use the ISM, which is even more forward-looking than our financial conditions index. The ISM gives us a 20-month lead, it's inverted here, versus the ETH Bitcoin cross. It kind of shows us where the business cycle is going, and as the business cycle improves, the ETH Bitcoin cross will improve. We're at the point where the business cycle will start to turn as we start bottoming in the economy. I know this is the most contested thing on earth, but that's what my work shows, and therefore ETH Bitcoin cross will start rising, and massively so. So that's getting me very interested in that, in ETH over Bitcoin. Now the next chart is the Fed net liquidity versus ETH. I mean, it's 1 for 1. It's crazy. And we see this with many assets, but as I mentioned before, Nasdaq and S&P started dislocating from this as the AI technology narrative started attracting new capital and their secular adoption models too. And so that starts outperforming. So once crypto starts seeing that, I'm guessing it's going to be the ETF. We're going to start seeing this drift away from the models and start outperforming. And that is, again, a signal that we're going into that acceleration phase that I'm looking for. And I always find that acceleration phase is obviously the most exciting part. That's the point when people start stupidly counting 1,000 for every time Bitcoin goes up. Oh, it's gone from 30 to 31 to 32. People start putting laser eyes and just lose their general shit. But it's a lot of fun, can be very stressful. But that point, I think, is setting itself up by all the macro indicators I look at.
Raoul Pal's insights regarding the potential crypto summer, his expectations of additional monetary stimulus, the resemblances to the 2010 to 2011 crypto cycle, and the lingering banking crisis all create a compelling stage for an imminent crypto surge. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.